Hey, what's going on, Wolfpack Nation? It's a Wolf. This is week 32 trade recaps. As always, we got those slides on deck. Now let's generate some edge. We can start off here with GME. So GME is still, in my opinion, an illiquid product. We were trying to get short here, just sub 160. And you can see just a psychological swipe here, right at the 160 mark. We just tried to get short. We thought the risk reward was there. We were a little late to cut. You can see the 60 bid was holding. We probably could have got out of here. I think the spread was around 50 cents or something, but we were late to cut. There's some mental slippage in this area, in our opinion. So that's GME. That was Monday. BTBT. So BTBT is Bitcoin BTC equity sympathy play, fairly liquid. The thing's been in play for a few weeks now. We had eyes on opening exhaustion. You can see the trade notes on the top left. 9:30, we were watching 9:52, and just watching a little tape, trying to get some motive on it. And then we threw some short feelers out at 20, 38, 42, and we filled small, and we're just taking a profit early. This is really early to trim, but we trim and trail, moving our risk down here right around the sheep line. But we use soft supply, and we just protected that unrealized column and stopped out in the money risk. But notice here, the asset started to break down. We noticed a shift in the tape on, looks like tape 1, which is or tape 2 above 3499, prints larger than 3500. That's our second tape. You can see we posted, this is just a print that we posted in the order flow room, but we noticed a shift right here, like around this 1848 breakdown. And then again, you can see that seller on tape, had a sustained ask, and they kept it down pretty good here. We were watching a little bit of tape back into it, and then at 11:20, right around this area, we reported that this the 60-minute soft test. It's an emotional soft test, and we were saying that because we saw the emotion on the tape on the breakdown, and you can see that on the top right. But at Wolf Trading, we try to predict areas of future order flow where we can try to generate motive and try to track these larger players who are controlling the asset. And we try to put you guys on the tape where we're watching. We don't know what's going to happen, but we believe that these areas that we're watching are inflectious. So we want to try to generate motive, as mentioned. And this is just one of the areas where we thought that the asset was either going to hold a bid and flip the chart psychology bullish, or it was going to break down. And it did break down here. This is BTBT. A lot of eyes on this one. Tesla. So Tesla is it was liquid. I think this was Monday, August 9th. It was liquid. Opening exhaustion. Actually, it dipped down, trapped some shorts, generated some uptick, rocket fuel, pushed up, upper consolidation. And again, you can see the emotion. You can't really see the volume here, but it was just, it took out highs, and we thought we wanted to compete up here. You see, we had short interest at 719.29. We mentioned that a few times, and we put some feelers out and we filled it. So we got filled on a nice risk to reward ratio spot, just below 719. We had some higher time frame liquidity deposits here that we believed could hold, and even if they don't, the risk to reward ratio is there. In our opinion, trader longevity is sustained exposure to high risk to reward scenarios. So this was a nice risk to reward ratio. I'm just doing the math on the fly here, but maybe a point of risk, and we ended up grabbing about 8 or 9 points. So all the trade notes are on the left hand side, and then we use soft supply to trail risk down, and you can see we just stopped out here, and we believe this to be a good formula. That's Tesla. WORX trade notes on the left. This is a healthcare. 7.5 million float. So it took out prior highs. We didn't really have any interest here. You can see at 904, we're mentioning this in the room. No interest in the low fours, but we're watching a little bit of tape at $4 just to see if we can try to, again, identify the larger entity, right? The larger players, the big cats on tape that we're trying to figure out. The order flow is pretty tricky these days. Not a lot of traders are talking about order flow or watching order flow, but at Wolf Trading, we really believe that The motive is in the tape. Order flow is quite a tricky language to learn, and we're just starting to learn it ourselves. But we believe that, over the last 18 months in the market, without a doubt, the biggest shift in the market has been the influx of liquidity. So if you're not tracking, order flow and liquidity, we don't really see where the edge is, but that's just our opinion. So this is WRX, tight risk trade. Again, just unwinding it nice. Fairly quick to unwind it, but happy with this one right here, WRX. AHPI, this one was fairly tricky as well. Let me pull some notes on this one. We had eyes on 1378 for the initial entry. We reduced it down by 50%, so we didn't do a full cut. We were looking for a price improvement to recycle back, which we did, and then we trimmed off. We filled on the flush prints to recoup. We recouped the 50% reduction here. So we trimmed it back off, and we're just trying to pad the loss on the way up, which we did. And then we priced improved again. And then we took 75% here onto this flush and trailed risk down. And we just protected the unrealized column and turned a losing trade into a green trade. But we kind of left it alone. Not the best trading here. It's a little bit of front side aggressive for sure. But we're glad we have this one in the playbook. Every trade is a little bit different. Every ticker has its own personality. And this one, we just kind of worked our way out of it. But like I mentioned, we're glad to have this type of execution strategy in the playbook. And that is AHPI. And that was on Tuesday, August 10th. MDIA had eyes on 975. We had a really high average on this one, a high percentile average versus the competition, the other short sellers. So we chose to wait for a lower target, and we took 75% off here at tier 1 support. And we discussed this a bit in the main room, but the market sentiment on this day, in our opinion, was pretty swipey versus downtick. So they were like consolidating, or they would make the asset look heavy. They would try to trap low emotional supply or downtick shorts, and then it was just swipey. And you can see here's a nice push through prior highs. And once if they have shorts trapped, you'll see competition on the bid. And really that's just the larger players are kind of sustaining an average, an asset price, with a separation from where the shorts may be their average. And then there's just like there's a gap, and they kind of roll with that. And then also shorts are trying to fight to get out for a loss here. And we just, it's just competition on the bid. That's just our opinion, but that's how we kind of see it. And we believe these algos are institutional high frequency firms or whatever they are. These larger players could just be banks throwing money at an algo to, create some outside participation. But whoever's printing these charts, they're divulging a lot of information on the tape here. They're telling us, how much pain or shorts in. There's a lot of information on the tape. We'll just leave it at that. Again, where order flow, we use leading data. So we use historical liquidity to predict areas of potential support and resistance. And regardless of what we feel or what we think, we use leading data on tight risk to try to confirm or deny a trade thesis. And that's really what we do. And we try to keep the risk tight, high risk to reward ratios. We protect risk, stopping out in the money. If we take targets, we trail risk down at the money, protect the unrealized column, trim and trail. And this is an example of just systematic trading. We took 75% off. And now we're locking in the unrealized column green as well with in the money risk. And that's MDIA. FULC, this one was tricky. We took a stab at it in a pre-market at 14 area, tight risk. So I have some trade notes. Talk about tricky order flow. This one was actually poetic versus our system. So we have a few images explaining this in more detail in the main room around 12:20. I have some slides, but we're happy with that. 953, soak. So here's the poetic stuff that we were talking about. That first entry here. So I believe it was a halt here. Again, this was on Tuesday. Today's Sunday. but we filled a nice fill here. We chose not to take any profit down here because we wanted the fade. There was an epic range on this. This thing pushed from below 9 up, pushed like 15, 16, 12 points. It pushed like 12 points, which was nice range. So we forfeited the trim here. This was our original scale. We filled the scale. It halted, I believe, somewhere in this area, and then we were looking for a 50% at the money reduction right here. It was just a near miss. We had them out. We didn't get them, and we didn't chase it up. We're not gonna, in the long game, it's just not in our opinion, it's not the best interest to start chasing targets up or chasing entries or exits, towards current price, because it could form bad habits. So we missed it on this one, and it was a bad miss, but it was fine. And then we ended up adding back on our second tier. So that was our feelers, and then our ads. We caught a partial. So here's the bad break. We only caught a partial on that initial push. If we would have filled the full scale, then we would have had another opportunity to trim here at the money, and that would have drastically changed the dynamic of the trade. So it was, like, as mentioned, it was fairly poetic how they got us here, and we like that. We like it when our system is challenged like this, because this is how we get better. We stack the winners up, and we focus intently on the losers and how we can tweak the system to give us better results. And we were talking about 953 soak. So risk on the trade here was a 953 bid hold, and we reported this as well. So I mentioned that, I wish I was just 1% better on this trade. That's what we like to do at Wolf Trading. We just try to get a little bit better each day, 1%. And I wish I was just a tiny bit better on this trade. Maybe we would have filled, but the risk on the trade was a 1953 bid hold. And you can see here there's ample opportunities, especially here. This is the tick chart, but you can see even on the tick chart that 50s, 53s is just holding and soaking and soaking. So we cut the trade. And we cut the trade. I don't know the exact fill, but off the next push or something like that, and we got out. And it was a good cut in our opinion, because we didn't want to. We were about 35% size on this. We didn't want to carry it up another 2 or 3 points. And you can see here, this is where we were looking to get back in for if it swiped or just pushed. We were expecting sellers to defend a lower high in this area and then fade. And it didn't happen, and you can see it also kind of curved and just went a little sideways. So we're okay with missing this backside, but we just wait for price to come to us, and we didn't fill. So FULC was good. ZEV, ZEV, this was also on Tuesday, August 10th. It was 18 million float, 55% roughly insider ownership. We just had we were looking at 78.84, which we filled in pre-market, and then we were looking for above 10. If they swiped 10, we would look to get a little bit more in. The pre-market entry was nice. It was high versus, the competition versus other shorts. We took off all of it, or 50%. I'm not exactly sure. This was about 5 days ago, but we added back, and the risk is tight. So again, the risk is similar here. Again, actually, I don't remember, but we like to keep the risk tight. So unless we're adding or scaling, and so we got flat here. So we're green. We're counter trend trading. The asset's bullish on an uptrend, but we're still shorting at counter flow, and we're able to stay green. That means we're able to handle the algo or handle the order flow or the aggression towards down tick. And we're just in a rhythm with the algo. We're waiting for our levels. So at 10 o'clock, we mentioned that we have some, we're looking at 12. We're looking at just above 12, and we caught it. We mentioned this at 950s, right before the fill, and it was a good spot. So it rejected. That was high a day, open market high a day right here, and then we just unwinded the position. I don't remember how much we took off, but again, in the money risk versus soft supply here, and we took it off. So that was a good trade as well. That was ZEV. FULC, remember the day before, they got us pretty good. We just showed some slides and notes on that. So we had a little bit of revenge trading on this one. We added in pre-market. We got I don't remember 35-40%. We stopped out. This was a wide cut for us. Normally, like as mentioned, we keep the risk tight, but this one the range. So this one started from $9. This is a 2-day push from 9 to 25. So there's some downside range on it. We wanted to give it a little room. It didn't work out. We stopped out, and then we were looking for opening exhaustion at 25, and we got a nice opportunity here, and we just unwinded it. I think we took some home as well. I don't remember what happened with it, but I don't think we got entirely flat here. I think we were even looking for lower targets, but that was FULC. That one was pretty tricky. But we caught it that day. Here's OPEN. OPEN, this was an after, I don't remember what the catalyst was, but after hours, it was a nice extension, and then it just kind of, they propped it up. It held. We took a shot at it. We wanted low targets on it because it was just such a massive emotional push. We thought maybe it would pull in. I don't remember where our targets were, but we believed 1757 to be inflection, so we had eyes on that. And the risk was a 1780 sustained bid, as you can see in the blue. If the bid can hold at 1780, we were going to cut it off. And we did. We took it off, and then it rejected, but we stuck to the plan, and that's a good trade in our book. That was OPEN, and that was on Wednesday. So then Thursday, ACY was running. ACY was a tricky trader. We got a little aggressive on it, and we counterflow traded it on the front. We here's an example of us getting the at the money trims on the first one, adding back to price improve our average, then taking profit, and we should have taken some profit here. We wanted targets below 27, I believe. And looking back in hindsight, it's pretty greedy not to take profit here. So I call this the greed zone because this definitely should be an opportunity to take profit here. As mentioned, we didn't. It came back up. We added back. And this was tricky. This was a tricky spot, but we were able to get off half. I think it was 35%, then 15%, if I remember correctly. And then we took off another 25%. And then we trailed risk. And the reason why we didn't stay with this trade was because Thursday was a half day. We went out of town. We took Friday off. But here's the upper tier. So the upper tier is tier 1. Here's tier 1 executions. We got flat, came back in. This was the final trade of the week right here. Again, similar action. Kind of a bull channel here, though. So when there's a lack of emotion here, we reduce size. That reduces the quality of the setup. So this is a smaller side trade as opposed to an emotional push like this. But again, we're just trying to stay in a counterflow rhythm. We took some profit here, and then it flushed. We took the majority of the position off, and then again, trailing risk in the money. I think our average was around 34.5 or something like that. But again, this is a in the money cut, and that was the end of the trading for the week. And then we took Friday off, and we went down to St. Pete, the Serrata Resort. We got a killer room with this view, and it was just a great disconnect from the market. And it was a lot of fun. St. Pete's a great city. We like going down there. All right, guys. So that's it. Hopefully this helped a little bit. Appreciate you guys staying with us for this 18-minute recap. So let's have a great week 33, and we'll talk to you soon, guys. Thank you. And if you're interested, here's just a little example of, I think this was August 8th, actually. Just some chatter that we have in the room. This is just a typical day right here of what we're looking at. So we try to report some technical levels, what's moving in pre-market, and we're not on the mic yet, but we're very vocal in the room with text, and I like that because if you're on the mic or if you have other traders that you're listening to on the mic, this can be a great compliment because we keep it's in the room, so you can rewind it and it's there, and we also do a lot of searchable education too, so which it's just another feature at Wolf Trading that we like to use. This is just a typical day here, but if you guys are interested, here's the Wolf coaching room, which we have. This houses our video library, so we try to keep up to date on this. We haven't added a video a couple weeks, but we're going to be adding some more videos soon. But there's 100 hours in this room. You know, we think it's a good room. Here's the technical room. Technical room. I don't want to show too much of what we do, but we do post levels of interest before price gets there. We're definitely in front of the tape, so we like to share the levels that we're looking at, and then as price gets to these levels, we kind of go over and we watch these levels together, and then yeah, that's how we became a little bit better at order flow as well. I will pop in the order flow room. MDIA, this was on 810. So we caught the exhaustion, and then we covered exhaustion. So this was exhaustion to exhaustion. FULC, this was tricky. Here's some live trade notes on it. So executions in front of the tape, targets out in front of the tape, explaining what the thesis is, where's the risk, where's the targets, what's the reward. So just some stuff like that. So hopefully this helped out, guys. I really appreciate you hanging out. If you have any questions or you'd like to join the community, we'd love to have you. So just send me a message, and all the information is down below. Thanks, guys. Have a great day.